Picture this. You own a thriving business in McKinney. Everything's running smooth. And one morning, your co-owner, the person who built half your client relationships, is suddenly gone. What happens next? That question keeps a lot of North Texas business owners up at night. And today on Insurance Talk Texas, we're tackling it head-on. It's one of my favorite topics because the folks over at Schell Insurance deal with it constantly.
Oh, it's such an important one. And honestly, it's the conversation nobody wants to have until it's too late. We're talking about two tools today: key person insurance and buy-sell agreements. And here's what people need to understand right up front. These aren't luxuries for giant corporations. They're for the family businesses all over Collin and Denton County that depend on one or two people to keep the lights on.
Exactly. So let's break it down. And let's start with key person insurance, because I think it's the one people misunderstand the most. What is it, really?
Great place to start. Key person insurance is a life insurance policy, and sometimes a disability policy, that the business itself takes out on someone essential. Could be an owner, could be your rock star salesperson, could be the operations person who knows where every wire is buried. And here's the key part. The company owns the policy. The company pays for it, and the company is the one who collects the benefit if that person passes away.
So the business is protecting itself, not the individual's family.
That's precisely it. Think about what happens when you lose a key person. Revenue drops overnight, lenders get nervous, clients wonder if they should jump ship. That benefit gives the company breathing room. It replaces lost profits, reassures the bank, and buys you time to recruit and train a replacement.
And that time is everything, right? Because you can't just post a job listing and replace someone who spent 15 years building trust with your customers. This is exactly why the team at Schell Insurance says every founder-dependent business should at least have the conversation.
Absolutely. And if you want to have that conversation, you can reach Schell Insurance at 972-423-4546. Now, key person coverage protects the operations, but it doesn't answer the ownership question, and that's where buy-sell agreements come in.
Right. So walk me through it. What is a buy-sell agreement doing that key person insurance isn't?
So here's the way I like to frame it. The buy-sell agreement defines what happens. The insurance pays for it. A buy-sell is a legally binding contract between the owners that spells out in advance what happens to someone's share of the business if they die, become disabled, or decide to walk away.
And without that agreement in place, things can get messy fast.
Messy is putting it kindly. Picture a Frisco business with two partners and no agreement. One partner dies, and suddenly the survivor is in business with the deceased partner's spouse or kids, who may have zero interest in running the company. You get disputes over value, disputes over control, sometimes the family forced to sell for pennies. A funded buy-sell prevents all of that. It fixes the value ahead of time and guarantees the sale goes through.
That's such a crucial point. And you said funded. That's where the insurance piece comes back in.
You got it. Life insurance is what makes a buy-sell actually work. The agreement can say the surviving owners will buy the shares, but with no cash to do it, it's just words on paper. The proceeds provide the money to complete that buyout without draining the company's savings or running to the bank.
Okay, so how do you actually structure these? Because I know there's more than one way to set it up.
There is, and this is where having a Texas expert like Schell Insurance really pays off. Broadly, two main setups. In a cross-purchase agreement, each owner buys a policy on the other owners personally, and when passes, the survivors use those policies to buy the shares directly. In a redemption or entity agreement, the company itself owns the policies and buys back the shares.
And I understand there's been a big development on that second structure recently. This feels like something Texas business owners really need to hear about.
This is so important, and I'm glad you brought it up. Back in 2024, the Supreme Court decided a case called Collin that changed the game for company-owned setups. In plain English, when a company owns the life insurance and uses it to buy back a deceased owner's shares, those proceeds can count toward the company's value for estate tax purposes.
Wait, so the very money you set aside to solve the problem can actually inflate the tax bill?
For larger companies, yes, that's the risk. But here's the good news for most of our North Texas listeners. The federal estate tax exemption is very high right now, and it was just made permanent last year, so the vast majority of small businesses won't cross that line. And Texas has no state estate tax, another win for owners here.
But the structure still matters.
It absolutely still matters, and that's the whole point. Whether a cross-purchase or company-owned setup is right for you depends on your ownership, your value, and your goals. This is not a do-it-yourself project. It's exactly why you sit down with the professionals at Schell Insurance, who coordinate with your attorney and accountant to get it built right.
And this is where Schell Insurance really shines, because they know the Texas market and these North Texas communities. Whether you're in Plano, Prosper, Allen, anywhere across the Metroplex, they'll walk you through it. Find them online at schellinsurance.com. That's SCHELL insurance.com.
Couldn't have said it better. And I want to leave people with one action step because this is so easy to keep putting off. If you own a business with a partner or your company depends on one or two people, ask yourself this. If that person were gone tomorrow, is there a written plan and is there cash to fund it?
And if the answer is no, or even I'm not sure, that's your sign to make a call. Reach out to Schell Insurance at 972-423-4546 or head over to schellinsurance.com. That's SCHELL insurance.com.
These conversations aren't a sign of doubt. They're a sign of leadership. Protecting your partners, your employees, and your family is what good business owners do. So don't wait until you need it.
Perfect place to wrap. Thanks for listening to Insurance Talk Texas. Give Schell Insurance a call at 972-423-4546, and we'll see you next time. Stay protected out there, North Texas.